Let's head on over to your markets now. Asian markets were mixed on Wednesday, but the euro staged a mild recovery. That's particularly on hopes that Italy and the European Union can ease a row that has fueled fears of another crisis in the eurozone. While China and U.S. trade spat simmers, the source of angst among dealers has moved to Rome after the populist government passed a purse-busting budget last week that drew a rebuke from Brussels and warnings to abide by EU rules on public spending. Asian markets slumping at close with the Nikkei dipping 0.7% to 24,110, while the Hang Seng edged down 0.1% to 27,091. The Shanghai Composite remaining closed for a public holiday. Well, the Dow Jones hit a record closing high on Tuesday, but a drop in Facebook shares weighed on both the S&P 500 and the Nasdaq. Expectations for earnings in the U.S. are perhaps a little too high, according to analysts, while the impact of fiscal stimulus is likely to fade. The Dow Jones Industrial rising almost 0.5% to 26,773 points. The S&P 500 marginally lower to 2,923, and the Nasdaq Composite dropping 0.47% to 7,999. Quite a fair amount of negativity coming through on the markets. It's been around 9 days or so of negative activity when you take a look at the market overall. Yes, Monday was a better day, but that shortened week last week was just negative territory. We are down for the year as well on the JSE All-Share. At the same time, the South African rand against the US dollar not faring as well as we would have liked, still above 14 rand 30 against the US dollar. We'll unpack all of that and more, but for now, let's look into how the European and local markets are faring. Maudi Lenzwano from Lehomo Capital joining me now as we unpack that market movement. Maudi, thank you so much for your time. I suppose the negativity coming through across the market really for South Africa, a whole lot of stocks except financials, or rather the financials themselves actually being one of the biggest losers as well today. Shouldn't a weaker rand be helping in that sense? One would have thought that anyway.
Yeah, look, it's quite tough. I mean, this negativity is continuing, as you say. But the financials certainly taking a big knock on the fact that the rand is weakening as well. I think that's what's putting all the pressure there. You are seeing a little bit of support in some of the counters, especially when you look into the resources sector. In particular, I was looking at Sasol. I mean, it's had a good run over the past couple of months.
That's purely because that oil price is going up,
Absolutely.
right?
I mean, it goes to prove that with the negativity that the oil price is bringing into, especially those oil importers, there are those companies and the countries that are benefiting from it. So what is negative for some countries is certainly positive for some countries, and unfortunately that's the situation. And you've seen Sasol, pick up quite aggressively over the past couple of months. But of course, other sectors are really coming under a lot of pressure. The financials coming under a lot of pressure. The SA Incs.
Yeah.
The economy is not growing, and I think the Minister of Finance will come in a couple of weeks' time to unpack exactly how the economy is going to be turned around, and hopefully we can begin to see a turnaround in the overall economy to support those sectors.
That's once he gets this state of capture inquiry done, of course, and October 24th is the day for that medium-term budget policy statement. Today we saw the earnings of EOH, but it's really down. It's not looking good at all. The CEO really saying that they have better prospects for the future. This earnings season hasn't been one that has inspired too much confidence. Even if you take a look at how the companies, the banks themselves have earned, even Capitec probably being the only one that has done relatively well. Is it now finally a case of the economy hurting the companies that are listed on the JSE, whereas initially that wasn't the case?
Yeah, look, I think it has been hurting for a long time. There are one or two companies that are able to obviously beat the odds. You mentioned Capitec being one of them. But if you look in general, especially on the SA Incs., they're certainly coming under a lot of pressure. And it's difficult for them to really do well in an environment where the economy is certainly just not doing, not coming through for them. And there's been a lot of pressure. So the likes of Capitec does beat the odds, and I think it boils down to their business model, just how they've been able to, separate, differentiate themselves among some of the big banks, and they've been able to capture that market and sustain themselves even in these difficult times. But the likes of EOH also the numbers are not bad. I mean, it's continuing to produce the results even in these difficult times. But when you look across the other sectors, Group 5 came up with the numbers. That tells you the story of just how tough the situation is in the country.
Yeah, a 1.3 billion rand loss there from EOH, so really bad. Although the share price did go up, however, but very low still from that 1 rand mark. 14 rand 39 against the US dollar. That's the mark for the rand. Surely we would have liked it to be below that 14 rand mark. Not much really happening this week. So perhaps a sense of just negativity in that market.
Yeah, and I guess yesterday as well, listening to the testimony by the Fed chairman, Jerome Powell, saying that, confirming what we already know, that the fact that the U.S. economy is on a strong footing. And I know this week we're expecting the non-farm payroll from the U.S., the job numbers that are going to be released. And I think those numbers will reaffirm what we already know, that the U.S. economy is just extremely very powerful at this stage. Unemployment below 4%, inflation continuing to rise, approaching the Fed a target of about 2%. So the Fed saying they might even look to, try and operate above the neutral point. In other words, try and raise interest rates at an aggressive pace, and that will not be good for emerging market countries such as South Africa. Take that with the trade war, add other issues such as the oil price. It's just not looking good for us, unfortunately.
Yeah, that oil price now at a near 4-year high, just around $85 a barrel or so. That's a scary mark, because now there's so many people putting out calls for 90 and perhaps even 100 before the closeout of the year.
It's a possibility, and then I think there's a bullish bets that are going through at the moment. When you look at the options markets or the derivatives market, all those bets are for the oil price to even to go up even higher. So if it does go higher, and the oil and the rand exchange rate or the dollar rand exchange rate weakens, we could actually see a very, very catastrophic situation.
Yeah. Overall on the market front for the remainder of the week, anything in particular you're looking out for? I know those non-farm payrolls data, as you mentioned, from the United States are going to be quite key as well.
Yeah, we had the PMI number confirming again that we are weakening, hence the rand is weaker. But I think overall for the market, I expect a very subdued kind of a trading session until Friday, when we get the non-farm payrolls. If it does beat to the upside, and I'm not too sure of the expectations, but I think if we beat the expectation, then we could actually see a further weakness on our currency.
Yeah, that's going to be quite interesting. Maudi, appreciate your time this afternoon. Maudi Lintwana there is from Lehumo Capital, of course looking at how the markets perform. That's where the buck stops for that. But President Cyril Ramaphosa officially